It's a new year and also the first weekend of the year. A very warm welcome to the weekend special of Companynama. I'm Sresha Tiwari. Hitting off with the corporate world updates first. Adani and Ambani are pitted against each other again, and this time for buying SKS Power. The two largest business groups in India are in the fray to acquire the Chhattisgarh company, which owes around 1,900 crore rupees to Bank of Baroda and State Bank of India. According to the Economic Times, the other bidders include NTPC, Torrent Power, Sarda Energy and Minerals, Jindal Power and Singapore-based Vantage Point Asset Management. A total of 23 bidders showed their interest in the company. A UK-India trade body has sought the Indian envoy's help in converting Vodafone Idea's interest on AGR dues into equity. According to the Economic Times, the body said that the delay in conversion has hit the telecom's operation. An earlier report said that the promoters are not willing to infuse more capital and it is making it unviable for the government to convert the AGR interest dues into equity. The promoters are willing to infuse 2,000 to 3,000 crore rupees, but it is too less to revive the company, while Vodafone Idea needs around 40 to 50,000 crore rupees for sustaining itself. The government-backed National Asset Reconstruction Company Limited, or the BAD Bank, has taken a lead in taking over two stressed entities of the SRE Group as it submitted the highest net present value bid of 5,555 crore rupees among bidders. NARCL's bid constitutes 3,200 crore rupees in cash and a 1,000 crore rupees jump from the previous plans offered. Autumn Investment and Infrastructure, another bidder in the insolvency resolution process, are not out of the game yet, according to reports. Dabhol on 2nd of January stated that it has acquired a majority stake of 51% of the equity shares of Bacha Masala. With a market worth of 99,528.81 crore rupees, Dabhol India Limited is a large cap company that operates in India's FMCG industry. Consequent to the transaction, Bacha Masala Private Limited has become a subsidiary of Dabhol India starting January 2nd. The shares of Dabhol India closed at 562.90 rupees a piece level, up by 0.26% from the previous close of 561.45 rupees on January 2nd. Reliance Strategic Business Ventures, a subsidiary of Reliance Industries, has infused equity worth 93 crore rupees in its overseas subsidiaries which own franchisees in the South African and UAE T20 cricket leagues. In more news, Reliance Retail Ventures Limited subsidiary on 3rd of January said that it will acquire 50% stake in Gujarat headquartered Socio Hajuri Beverages Private Limited. The existing promoters, Hajuri family, will continue to own the remaining stakes in Socio Hajuri Beverages. With this, Reliance Retail aims to strengthen its portfolio in the beverage segment, having already acquired the iconic brand Campa. And over to the segment that focuses on major controversies and disputes around corporates. Let's find out which were those corporate giants that were on the radar this week. Bengaluru-based fintech unicorn CRED has stopped placing Paytm's merchant QR codes under its branded standees at offline stores following the intervention of the National Payments Corporation of India (NPCI) based on a complaint filed by Paytm. The issue arose when CRED started using Paytm's QR codes on its standees with the words, "This QR is partial to CRED members." This created a perception that the QR codes were issued by the fintech unicorn. Following this, Paytm, which has been pushing to grow its offline network with the Paytm Soundbox as a point-of-sale device, filed a complaint with the NPCI. The payment body then asked CRED to stop using Paytm's QR codes. The Mumbai NCLT granted interim relief to Torrent Investments on 3rd of January by directing the administrator of bankrupt Reliance Capital not to present the revised offer Hinduja Group made past the auction deadline to the lenders until the next hearing date. Torrent Investments, which emerged as the top bidder in the auction process with an offer of 8,640 crore rupees for Reliance Capital, approached the bankruptcy court to restrain lenders from considering Hinduja's upgraded offer of 9,000 crore rupees, arguing that accepting late offers violated the norms for insolvency resolution process. The tribunal will take up the matter for further hearing next week. NCLT on 4th of January declined Google's request for any interim stay on an antitrust ruling that ordered the tech giant to change its approach to its Android platform. A two-member bench, however, declined to grant any immediate stay to the operations of Competition Commission of India (CCI) penalty and said that it would pass any order after hearing out other parties. The appellate tribunal has also issued notices to CCI and directed to list the matter on February 13 for hearing over interim stay. The NCLT direction came over a petition filed by Google challenging the CCI order on the tech giant abusing its dominant position in multiple markets in the Android mobile device ecosystem, saying that the verdict is a setback for Indian users and will make such devices more expensive in the country. CCI had earlier slapped a penalty of 1,337.76 crore rupees on Google for anti-competitive practices in relation to Android mobile devices. Moving on to our final segment, let's take a look at what's brewing in the startup world. Edtech giant Byju's founder and CEO Baiju Ravindran is reportedly in talks to raise funds to increase his stake in the startup to as high as 40%. As per a Bloomberg report, Ravindran would use the fresh funds to buy back as much as 15% of the firm by using his shares as collateral. Ravindran has about a 25% stake in Byju's as of now. Let us remind you that last year too, Ravindran increased his stake in Byju's by participating in a $800 million strategic funding round. And Walmart Inc. and other PhonePe shareholders will have to pay nearly $1 billion in tax after the digital payments company shifted its headquarters to India. The bill stems from the relocation and a rise in the value of PhonePe Private Limited, which Walmart took majority ownership of after acquiring parent outfit Flipkart Online Services. Now separated from Flipkart and shifting bases from Singapore to India, the PhonePe is raising funds at $12 billion pre-money valuation from General Atlantic, Qatar Investment Authority and others, triggering the hefty charge. New investors, including Tiger Global Management, have now purchased shares of PhonePe in India at the new price, leading to tax implications of roughly 80 billion rupees for existing shareholders. And the much-awaited IPO of Oyo is likely to be delayed till September-October of 2023, around the Diwali period, as the capital markets regulator SEBI has asked Oracle Stays, the parent of tech-based travel service provider Oyo, to refile its IPO papers with applicable updates. The capital markets regulator returned the travel tech firm's DRHP on the 30th of December last year and asked the company to refile it with applicable updates and revisions. As per the latest update on SEBI's website. However, SEBI is yet to elaborate on the updates or revisions required in the draft documents. This is expected to delay Oyo's initial public offering. Oyo was targeting an early 2023 offering if the market and economic conditions were stable. Food and grocery delivery platform Wiggies' operational revenue more than doubled to 5,704.90 crore rupees in 2021-22, while losses surged to 3,628.90 crore rupees from 1,616.90 crore rupees in FY21. Regulatory filings sourced from business intelligence platform Tofler showed this, and the biggest revenue head platform services clocked in 3,444.40 crore rupees from 1,878.90 crore rupees in FY21. Its sales from grocery and FMCG products expanded nearly 4 times to 2,036 crore rupees. Well, with that, calling it a wrap on 2023's first Companynama episode. See you again next weekend with more corporate and startup updates. Until then, go ahead and download the Money9 app on your Android and Apple iPhones for more Money9's other exclusive shows. Have a great weekend and stay tuned to Money9.